Ebele, I want to start with you on that exit strategy. How significant is it that they do not have one and are not talking about it yet?
I think it's very significant, Alex. It's something that I'm actually concerned about. When I think about what's at stake right now, people are talking about extensions. It's priced into the market. Initially, 6 months was priced in. Now, 9 months is priced in. When we're talking about compliance, I do believe that they will be able to stick with compliance. As I said before, there's a lot at stake. What concerns me is that there is no clear messaging around the exit strategy. Yes, it might be premature for them to talk about stopping those cuts, but it's not too early to start telling the market and communicating what it is they're going to do. The way we look at the market going forward, there's going to be oversupply in 2018. So making the market wait to see what's going to be done, if it's in the next meeting or if it's in the meeting after that, doesn't help. They're talking about price stability. To get price stability, we need to know what the end game is.
Fair point. And David Wethe, if you're an oil producer here in the U.S., do you care what the end game is, or are you just hedging today and being happy?
I think you're hedging right now and being happy. You're enjoying what you have right now. It's clearly helped these guys to be more profitable right now. They experience a much higher oil price than what it currently is today, and so they're pumping along doing their own game plan. What
forward curve hurts them for hedging? Like, what's going to be the turning point that shuts off shale in your research?
I mean, it looks like it keeps going lower and they keep getting more efficient. So, I mean, what's the ultimate end question? I mean, I hear some people say as low as $35, $40. So, they're still in the game right now.
All right, they're in the game, Ebele. So paint a strategy for me in 2018, all right? We finished the cuts. It's now January of 2018. What is your base case for U.S. shale production, and what's going to have to be the reaction from the Saudis?
So base case for 2018 is N3 to exit, we're going to grow about 1 million. And so that's why when I said when we look at 2018, we're still going to be building crude. So it's nice that they've tackled the first quarter, which obviously is by extending 9 months, they're going to have a draw in the first quarter. But the Saudis, again, in November or December of this year, are going to sit down, start talking to their members, and figure out what they're going to do for the second half of the year. The second quarter of 2018 still has builds in the market. So that's why I said we need to know what the strategy looks like, because if we don't have that, you're still going to see the volatility that we've seen in the last 6 months in the market.
Well, fair point. And then it seems like also from hearing the rhetoric, Ebele, is that they're really focusing on natural decline rates and demand. It's like, I'm hoping those two come through for me in order to stabilize the market. What do you see as a demand picture? Is it as rosy as OPEC needs it to be?
So unfortunately, when we came into the beginning of the year, there was a lot of animal spirits for a different reason as to why global growth was going to not only be synchronized, but robust. Unfortunately, we've seen in the last few months that that has not been the case. Demand is still pretty high. If you look at it historically, we're having a good amount of demand, but we're not having what most market participants had expected for this year. On the flip side of that, OPEC had actually been rather modest in the way they had anticipated what demand was going to look like. They have about 1.2 million barrels of demand, and I actually think they're going to be shy. Right now, demand is tracking to be around 1.3, 1.4. Again, it's lower than expectations coming in. The market had closer to 1.6. So if OPEC indeed is looking at a 1.2, I think they're going to get that, and the market will exceed that. But they just can't hope on demand. As I said, it's one thing to think about what demand's going to do this year. I think that what OPEC is doing is sufficient for this year, but to keep hoping that demand comes in excess for 2018, it's not enough.
Yeah.
Because of, shale is ramping up. That the intersection of demand and supply is not going to cross till the first quarter of 2019.